All right, Osero.
Yeah, thank you for having me, guys. How you doing? Pretty exciting day for us.
Yeah, huge day. Give us the quick what's going on. There's a lot of stuff on the timeline that I'm actually just seeing for the first time. We can pull up here and give the world the news.
Sure. So yeah, I'm Piotr, founder of StableWatch. We've been working on different kind of things related to yield-bearing products, from analytic research to risk advisory. And today we just announced the incubation of Osero, which is a new Sky ecosystem, prior known as Maker agent. So this party taking care of all the economic activity, taking care of part of the Sky's balance sheet for us, up to 2.5 bill capital we could deploy to various type of institutional grade assets. And on the other side, we expanding the Sky ecosystem and giving people as well as application access to sUSDS, so the biggest yield bearing product out there. And we also announced not only Osero itself today, but also the raise, which we closed at 13.5 mil with Sky leading that, and Plasma
It's
being
huge.
the co-lead.
Where's the confetti, Andre? Do we have the confetti? Is it ready to go? 1 second. All right, we got to repeat that. How much did you raise? $30.5 million. Confetti in 3, 2, 1. Ooh,
Yeah.
this is good. I like this.
Hey, a little
Dude, congrats.
celebrations.
Thank you.
All right, so give us maybe the the story here a little bit of like the evolution from StableWatch to what you are now building. It looks like this is like also the relationship here is really unique with this like incubated model. I'm wondering just yeah how this came to be and maybe the relationship with StableWatch and dive into that a little bit.
Sure. Yeah. So we started StableWatch early Q1 last year, and we've been initially focused on research and data around like yield bearing products. So we've been first to come up with a lot of data sets covering the category, doing the first like indexing all of them, really making a lot of research around it. We came up with the YPO, so yield paid out metric, which now is being used in various places. And so on. We've tried very early to go into this direction of a rating agency, I would say, but it was very hard to pitch it to investors. They haven't really believed that it's possible to come up natively, like within crypto, to become kind of a kingmaker, the same as S&P or Moody's are on the traditional side of finances, right? And that the only way to exit such a business would be probably through acquisition, as this kind of venture doesn't need a token. So to build this kind this vision we had initially, so of providing all of the data, but also like live reporting on all kind of risk metrics around those products, which is still missing in the space, and I believe it's like very big problem. We just had not enough money to build it on our own, because we would need like tens of millions of dollars really to build this kind of an infrastructure to do that live, which is, by the way, very sad to see that so many people are coming up now with AI slop dashboards, claiming that they're live and helping people taking the financial decisions. I think gonna come up with a lot of decisions in the long term, as deep research is not suited to help you manage financial risk. But as we were not able to do that, and we've been bootstrapping StableWatch on our own, we need to find some other way to survive, make revenue, and so on. So initially we were focused on the research, and first like very big partner who believed in us and put trust in our team was Plasma, which is co-led investor of this round, and we're very thankful for that to the whole team. We've been doing a lot of research work, but also custom data solutions for different kind of teams. And we saw that this is not scalable. And also we can't really translate that into building even more data sets, which could be publicly facing, because our mission with StableWatch was also always giving people access to reliable data, which can help them navigate this yield-bearing space. So we switched to the risk advisory. We still did quite a lot of research when we needed, but we cut it, work on the data side. And we've built a few models internally. Like one of them is called StableSim. It's a Monte Carlo simulation where we run a lot of agents through it, and it's like based case by case on whatever client would need. But overall, we try to help founders and protocols understand in what kind of market scenarios the protocols would default. And then we can try to work on like minimizing the risk, and the most importantly, just let them know what can happen wrong. So that was pretty successful, and quite a lot of projects really wanted to work with us. And while we were doing like more and more engagements in this yield bearing space, we like really every time we've been looking at Sky ecosystem, we've been really amazed in how the model is working there. As the risk framework is inspired by Basel III, which is like banking regulation introduced after 2008 crash to minimize all of the
Mm.
things which could go wrong with any kind of an allocations like on the in the banking system, and how scalable this solution is, where few whitelisted parties called prime agents take care of this economic activity. Those different teams are focused on different kinds of the markets. They get different kind of edge. Spark guys, for example, are super experienced on the DeFi side, or growth guys who got really great expertise on the RWA side, especially underwriting credit and so on. So we started the engagement with Sky, I would say around November last year, and we became contributor mostly on the data side as well as the risk side. So right now, if you would go deep into the to Sky forum and one dog called Atlas. I know it's like pretty big task to go
Yeah.
over all of that. Like Sky ecosystem is a pretty complicated creature, but overall you could see like a crazy name like Kia, which is big new vision of how Sky ecosystem going to be transformed.
I'm curious to break this down a little bit. So you were first trying to be this kind of kingmaker, and they said, to truly do the live data and all that, it just requires an amount of capital and scale. So you shifted a little bit towards advisory, but that wasn't quite scalable. Then you got into risk advisory. You started really hitting it there. And then this risk advisory business, which it seems like there's something there. You're telling us maybe we could prevent a analogous repeat of the 2008 crash. That sounds pretty good. I don't want another one of those. I don't think anybody does. But is Osero a new evolution too? StableWatch is that sort of risk advisory, and Osero is a new evolution, because this is kind of savings account, right? Stablecoin savings account.
Yes, how I would say it, and why all of this intro to this. Osero is one of like 5 whitelisted parties in this Sky ecosystem called prime agents, and we got dual mandate. So on one part, we expanding the Sky ecosystem and letting more people access their primary products, USDS, which is payment stablecoin, and especially sUSDS, which is the yield-bearing product, a yield-bearing version of the stablecoin, and the biggest one in the whole market. And sUSDS is based on this whole risk framework, to which we already been contributing, to which we have built a big part of the data indexing for, and so on. So we got like great expertise in how this really works, and been like really excited about the product. We believe it's the most scalable one, and it's just great. So this is
Love
only
it.
one part. Those are, I would say, kind of BD activities, I would call it. On the other side, you can see Osero Foundry, and this is Osero managing part of the Sky's balance sheet, biggest balance sheet on chain at the moment, with around 15 bill on it, and we are looking to onboard new kind of assets into Sky ecosystem. So at the moment, the balance sheet, so backing of sUSDS, is consistent of some stable coins, so we can meet any withdrawals and meet any needs around the liquidity. This is mostly USDC. It's more than 4 bill of that on the balance sheet. You also got some RWAs like MMFs or T-bills. We had some exposure to CLOs, so private credit, and proxy through Janus Henderson. Burger King or Twitter took
Love
money
it.
from Sky, you could say. And what we doing is we looking for those new opportunities, like let's say short-term payments, financing, or maybe that would be reinsurance, any kind of exposure which would be uncorrelated to what is already on the balance sheets, so we can mitigate the concentration risk. So overall, just looking for a new assets which Sky could put money into.
Would you say that that is, when you think about the advantage of the history of StableWatch, the risk, the data clarity, the team you've built, talk a little bit about the advantage you see in identifying those opportunities and evaluating the risk that comes with actually doing this type of portfolio curation or structuring well, and maybe the unique advantage you guys have there.
Sure. So we got really great expertise, especially when it comes to the data side of things, as well on the risk side. So on the data side, you can see part of our work publicly on StableWatch, but there's also a lot of stuff like we build internally, either for clients or just for us. Also, big part of that we built for Sky. So we got really granular view of everything what is going on within the DeFi ecosystem. What are all of the interdependencies between different kind of assets? Because if you look at asset A and asset B, you could think that if you allocate 50% into this one, 50% into the other one, that you're somehow your portfolio is not concentrated like within one counterparty, but then you got the same oracle. Maybe the protocol A actually is allocating half of its supply to protocol B, so you have some like rehype around them and so on, right? So we like been doing this kind of research and data indexing for a very long time, and we just got good understanding of what's going on in the space, and we get capabilities to really fast come and build the new data pipelines if there are any new products out there, and if they're on chain, of course, because a lot of the stuff you can see got the RWA exposure, and then there's like off-chain stuff which you can also access, but you need also some legal work and so on, as it's not that easy as just looking at the stuff on the blockchain side. When it comes to the risk side, we've been core contributor to the Sky ecosystem and to the like Waniakia, so this whole restructuring. Let's say beside the data part, we also help a lot on the risk side, and thanks to this, we understand well what are those constraints and what Sky really would like to do within the new allocations, what kind of a risk profile should be there. So it's much easier for us, I would say, to think already on the first glance if this would be something we should be spending our time on, and teach it like to Sky, show it to the forum and try to onboard, or it's maybe not a good time, maybe not a good risk profile. So I would say we just got really great understanding of what's going on in this very complicated creature, as I said, which is Sky protocol.
So you have these three core areas here that we're looking at on the screen, and I'm imagining they maybe exist independently, but also have really interesting relationships with each other. Earn, App, and Foundry. So Earn, it looks like, is this kind of embedded solution that you can sell into the application layer, companies that are already building their own apps that they want to have the ability to embed things like yield into their experiences. But then you also are building your own app, the Osero app, giving retail and institutional users direct access to this. Maybe talk a little bit about the differences there. Like as you bring that app to life, what is the relationship or uniqueness between, like, why would I use this app versus just going into an existing application with that Earn product embedded? What would be the kind of benefit of that, or how are you thinking about the differences there?
Sure, it's a great question. So the main difference between Osero Earn and Osero App, like Osero Earn is a B2B line, so we still just want to come to the end customers with the same kind of a product. But we know that most of them already got their favorite apps, right? Maybe they just want to use Plasma One. Maybe they only want to use one kind of a wallet and don't really want to install a new one, right? So we want to bring a sUSDS, which is the biggest yield bearing product out there, the most reliable with the most liquidity and the risk profile where you got junior risk capital. So if some misallocation by any of the agents like us would happen, this is gonna eat the loss first and not the users. And at the moment there is, I will need to check it data, but I believe over 70 mil of junior risk capital sitting in terms of something would happen. And there also you got mezzanine capital and so on. So there's actually a waterfall of losses, which you can understand. And then it makes it, I wouldn't say a easy pitch, but pitch, which is really different than any kind of a savings product out there. And with this, we just want to be integrated with your favorite app where you already have your funds. When it comes to our own app, there is still a lot of users who are not decided yet where they would like to park their money and so on. And they can just do it through our own application, which is not live yet, but it's fingers crossed going live very, very soon. Stay tuned. What is the differentiator is that you got much more clarity over the liquidity profile, the whole backing, the dependencies behind the savings option, and so on. So we just put in work all of the data capacities we have. So it's easy for you as a user to understand what is in this very moment happening with your money. And if you're safe being allocated into that product, when and how much you could withdraw.
So
Walk
what
us.
what now happens to StableWatch in terms of I mean, I know that you have a community there that seems really active. The product and the dashboard itself, as we're looking at here, I'll pop up, like it just continues to get better and better. We've been following this, like in our business, we've been thinking through this, as you know, just like how do we help make data visible? How do we bring research, media, and data together? It is an interesting thing though of like where are the profit centers within this business, and how do you actually monetize this? What is the end goal? I think we've thought a lot about that, and I think equally struggled to anchor what makes sense. I guess what is the future of what I think I mean, knowing your team and knowing the group of people that you've built, I can trust that like there's been so much effort and existing build in this product. What happens now to StableWatch in terms of the analytics? And is this something that's going to continue to kind of exist and thrive and go up and to the right, or is this something that's going to maybe phase out over time in your mind or become less of a focus?
Yeah. So it's very like interesting, and we've did a lot of customer like user research and interviews to understand what they would like to see StableWatch and out of our offering. And you could see that some time ago, we actually cutted out some of the data which have been on the platform because we realized that like 95% of them actually wants to have only maybe not surface level of the depth of data, but
Love this. Sorry to cut you off. This live yield paid out. That's
thank you.
sick. It's like since
Yeah,
I've clicked this link, I mean, that's sick. So yeah, I mean, it's so cool. All these little things. So continue forward. Just it's fun. We
it's
can kind of see this grow in real time,
Yeah, it's my favorite feature as well. So great to see you love it too. But so yeah, what we're focused on at the moment is not really scaling vertically. So we used to add a lot of depth of the data for each position. And that means you need much more people to do that. It's much more indexing, much more costs you need to bear, and so on, if you want to go into like really granular data. So we've seen that most of the users actually don't use that. And the most of this in-depth data, we only use it when we work like one-to-one with some clients, right? With Sky or Plasma or whoever else that was. And it makes no sense to bear all of those costs, make all of this indexing, like and have no really revenue out of that. A stable, which is a public good on that front of a dashboard as well as the research. So what we're going to be doing is we are scaling horizontally. So if you're gonna go to the home page up there on the left side, you can see that at the moment we're indexing almost all of the yield coins. So those yield bearing stable coins. I mean, this is a wrong name, but most people call them like this. But you could see there is lending grayed out there, real world assets and derivatives like PTs from Pendle and so on, right? So we just want to cover the whole yield market to say, and this is like the next big thing for us. And then we're gonna doing what we did always, so listening to our users on what they need and what they would like to see next coming out of this. And then if you would go to our research, so yes, this is it, and you can click on state of the market, maybe, please, on little bit down.
Oh yeah.
Yes. So we came up with this new format, which is called StableWatch memo. And when you're gonna read it, you will see that this one or the first one, third one is coming in a few weeks, is like really in-depth research, which is focused on this intersection of TradFi and DeFi. So what we're doing here is we're talking about what is going on in traditional finances, how the market looks like. The first piece was about the distress in the private credit market. And then we talk about how DeFi is positioned for that, and maybe if this is already impacting DeFi and the products we have here already, or maybe not, and try to combine both parts of the data. The TradFi one coming from like big venues like maybe PIMCO, KRR, and so on. So we're using a lot of, top industry research from this part. And then we come in with our expertise, trying to combine that. So both group of the users, TradFi ones and like on-chain natives, can understand better where all of this is going, as our vision is the same as when we launched StableWatch, that all of the finances, all of the settlement, not only payments, but also when it comes to yield products, gonna be happening on chain. So it's super exciting to just stay updated on that. And this is what we must gonna be doing on the research side of StableWatch now.
Yeah. Amazing. Maybe last question for you as we wrap here. One, thanks for giving us some time today. I know you have a huge day, and it's just super exciting news. As a bootstrapped founder, this seed round I'm sure is like just incredible to have in public and be able to invest where you really want to. So congrats.
Thank you.
What is maybe last question for you? What is the best way that Stabledash as a media business focused on this category can work with what you're building to support, amplify, highlight the right things, bring some of this data to life? Like how can we serve you and the users you have better?
Yeah, thank you. And really interesting question. I would say that it's really important to always highlight when we see that something is going wrong in the space. And we've been very early calling few projects out, like Stream Finance, for example, which, by the way, tweeted something like, I think yesterday, which is pretty funny after such a long time, that it's a black box and you can't really see, neither understand what's going on inside. So it's like just a few guys on a multisig. So I think just highlighting when we don't like something as builders is important, not to blame anybody, but rather because we want to bring more transparency, right? And we should be asking right questions about where the yield is coming from, especially. So this is the one thing. And the other is, I believe we're already crossed this inflection point where pretty much everybody on the TradFi side, no matter what kind of a venue you're going to think of, from BlackRock to JPM, they already not only testing out, but they're actively working with some on-chain setups within their firms. And it's very important to cover that, help those people understand what we are doing here, as well as help us like Web3 native people to say, go through smooth transition, because those two words definitely gonna merge very soon, I believe.
Amazing. We actually have some interesting stuff cooking with Anna and the Parena team. I know that you're close with them on like exposing some of this stuff under the hood. So I'll follow up with you on that. We're trying to get some like where does yield come from? How can we expose this? How can we bring transparency to this? So yeah, would love to involve you in this. So Piotr, thanks for the time. Big day. Appreciate you joining.
Thank you very much, guys. It's been a pleasure, and see you later on. Love this show, so thank you again for inviting me.
Awesome.
Amazing.
Have a good one.